back to Wealth Wednesday. My name is Bryant Stone, Chief Investment Officer at Polimeni Tax and Financial Group. I appreciate you guys coming on this week as always. And this week's topic, we're going to talk about what is an ETF, and kind of the way I'm doing these Wealth Wednesdays and bringing content to you guys out there is that I want to have it flow. So the last couple weeks we've talked about different type of retirement accounts, different type of investment accounts, different type of college planning accounts to have, personally or for your children and or, something maybe at an employer. So now moving forward, kind of flowing with these Wealth Wednesday series, I want to talk about different types of investments that you can actually have in these accounts. So when we talk about different types of investments, one of the newer, more popular type of investments that are out there right now are ETFs. And what does an ETF stand for? An exchange traded fund. And simply all that really is it groups together like individual stocks in a certain sector, in a certain index, some type of certain commodity, and it tries to formulate a value, and that value tracks that commodity in that sector, that index. So then that way for you, what it does is it eliminates what we call single stock risk. So you don't have all of your money invested in one particular company or one particular bond or one particular real estate transaction. So it tries to group things together to help you eliminate that single stock, single bond risk, okay? Another thing that ETFs do is it helps lower your expenses when it comes to expense ratios inside different equities, bonds, and different types of investments. Since they are grouped together, it allows that ability to lower your expenses. So sometimes that may make some sense for you. Sometimes the cost in it may be more compared to a single stock. More times than not, it isn't. So ETFs are popular in that sense as well, as that they have lower expense ratios. Okay. Now, another thing that ETF does that's very similar to a stock is that the price is going to change on a daily basis. You can buy it on all the exchanges, the New York Stock Exchange, the NASDAQ Stock Exchange. You can buy it similarly like a stock. You can have it included in your portfolio. And it's different in a sense for a mutual fund, which is only, priced once a day. The ETFs are priced, on an hourly, minutely basis, just like a stock is, okay? Now, let's talk about different types of ETFs that you may have in your portfolio. So if we're designing a portfolio for you, if you have a financial advisor, someone that's working with you to design a portfolio, there's a bunch of different types of ETFs you can have. One of them is a bond ETF. So what is a bond ETF? A bond ETF is going to track a particular group of bonds, okay? So you can get the overall value of what that bond may be. And then the income that's going to be distributed from that's going to be based upon those group of bonds that it does track, okay? Another type is stock ETFs. Stock ETFs basically comprise of a bunch of stocks, whether it's, aggressive stocks, whether it's moderate stocks, whether it's conservative stocks. And once again, it prices out that ETF. Then that way you'll have, not those single stocks, but you'll have a value from that ETF, okay? Industry ETFs is another type. Industry ETFs track like a sector, so whether you want, your money invested in the health sector, whether you want your money invested in the energy sector. So there's industry ETFs out there that you can invest in, so that will give you, as a shareholder, some value in that specific sector without, once again, investing directly in that one health company or that individual energy company, okay? Another type of ETF is commodity ETFs. What are commodity ETFs? Once again, these are a group of, ETFs that are going to track maybe something like gold, something like crude oil, different commodities out there. So once again, you're not directly invested in the crude oil and or gold. It's going to track that specific sector for you, okay? Another type of ETF, currency ETFs. So what's popular now is the Bitcoin, right? The cryptocurrency. The dollar isn't as popular. The yen, the euro. So different currency ETFs will track those particular currencies that are out there. And once again, so like just to give an example, because it's very popular right now, the Bitcoin, there's a lot of Bitcoin ETFs that are out there right now that don't force you to be directly invested inside that, the Bitcoin itself, but you'll have, some exposure to that. So if the Bitcoin does go up, that ETF will go up as well, okay? Another type is inverse ETFs. So what is inverse ETFs? Inverse ETFs will basically try to, I wouldn't say prey, but try to track on stocks that you think are going to decline in value. And what happens is you'll sell it if you think it will decline in value. That's what inverse ETFs will do. And then they'll repurchase that stock when it's at a much lower price. So inverse ETFs basically will track, if the market's going bad. And that's the whole purpose of an inverse ETF. So then that way, from a diversification standpoint, you can not only earn money in the market if the market's going up, but also earn money if the market's going down. Now, there's a lot of complexities with that, and I don't recommend that you just start researching things on Google and investing in certain ETFs without consulting your financial advisor. But definitely start to research these things for yourself, because it can be a great asset to your portfolio. In moving forward, guys, in the next couple of weeks, if there's things that you want to talk about, on Wealth Wednesday, or you want me to talk about, please comment on the videos. Let us know what you want. If you like it, don't like it. Once again, appreciate you guys coming on. See you again next week.